Well, Tata Motors clearly is the stock of the day. The exciting deal in the entire EV business has certainly re-rated Tata Motor as a stock, and their outlook and the capability as a EV player is something which now markets are recognizing. So is this just beginning of what could be called as a big turn for Tata Motors, and how should one really expect the future in terms of the entire EV passenger car business for Tata Motors? To discuss all that and much more, it gives me great pleasure to bring on board PB Balaji, CFO with Tata Motors Group, Shailesh Chandra, President Passenger Vehicle Business with Tata Motors, and Ankur Thadani, partner with TPG. Gentlemen, congratulations on this deal. The stock is honestly doing cartwheels as we speak. It is at a record high, so markets are mighty excited about this deal and the peg value the deal has put to the entire value of Tata Motors. Balaji, markets would like to know one thing, that this is a very big endorsement by a private equity player on the capabilities of the EV business of Tata Motors. Walk us through that, how big this business could be.
I think the way to look at this, Nikunj, is that currently, if you look at the PV business, the EV penetration in the PV business today, the market, it'll be anywhere between 1 to 2%. And for Tata Motors, this number is now starting to trend towards 3%. And by the end of this year, we expect to see this close to about 5%. What is really interesting in this is what I'm talking about is just sales. If I start looking at the booking rates, the order books that we are currently running, it's almost 3 times the current size that we have. If I take Nexon today, the volumes that we sell roughly about 10,000 Nexons, of which 1,000 is EVs. There are markets, and this is not the entire market. We're doing specific cities today. And in those cities that we sell, these numbers are already starting to outshine the diesel numbers for Nexon. So what we are seeing, and these are data points that I'm giving you. So what I'm seeing this is that if you're able to take this and extrapolate forward and say, get the full charging infra in place, ensure that you're getting the range of these cars enhanced further, ensure that you get a full choice of products and portfolios that's out there of all ranges, styles, body styles out there. And you start looking at affordability, look the price laddering of the cars from all the way from, let's say, an 8 lakh car all the way up to a 15, 20 lakhs kind of a car. You suddenly realize that the opportunity actually opens up multifold. Because today what is happening is the consumer is ready to convert, 1. 2, the TCO economics are playing in your favor. Take a simple, and just the running cost of it being 1/6 to 1/8 of the running cost of a diesel or a petrol means that the economics also are starting to work in your favor. Add incentives, subsidies, state subsidies that are there, add PLI benefits coming in. Suddenly you realize that the question that Shailesh very interesting, tell me one reason why you will want to buy ICE rather than why will you buy EVs. So that is the way you have to look at the opportunity. And when you look at that opportunity, rather than put a number to it, we said, okay, let's start focusing on what all we need to do to ensure this potential gets realized. And that's why if you notice the whole deal structure is that the EV company will not waste 1 minute trying to do stuff which somebody has already done. There is no time available. This has to be looked at as everything that needs to be done to make this entire story that I just talked about earlier come to life. So this gives us full freedom to look at the full range of interventions we need to make in order to realize this potential. That's how we are looking at the deal.
Balaji, my immediate follow-up question would be the fact that you got PE money into the EV business. Now, being a Tata Group company, you don't need that capital. Do you think this exercise of getting a private equity player is just an endorsement to tell your shareholders that what the capability of this business is?
Great question, Nikunj. I think when we went out looking for capital, it's not that we were saying, as you rightly said, it's not that we were desperate for capital, that we need the capital now. We were keen on a few things. One is we wanted a partner with whom we are able to align the purpose on day one. And that's the reason TPG Rise Climate actually with a fund that is focused on climate change means that the way you think and the way you operate is very similar. And the long-term nature of it also becomes very, very important. Second is also about access to ecosystems, because it is not just about we doing everything in India. They've seen the world. They invest in different parts of the world. They see so many assets coming their way, which they've evaluated, which for us is invaluable. That's the reason for us, we are very happy to have them on the board as well. because they're going to add tremendous value to the board in terms of the conversations and the risk. The biggest thing in the EV journey is risk. It's not about what you do. It's about making sure you don't do things that have gone wrong elsewhere. And what better way to learn it than through somebody who's already put his money and then understood it from that perspective. So that's the second reason we have them. And lastly, I am a firm believer that if you have an external person coming in and scrutinizing, why did we subsidize the PV business? Why did we do segmental results of PV CV? It is all about saying that the more transparent you are, the more open you are, the more right you will be. And therefore, getting an external investor into it also means we are now going to, we are committing to it. We are serious about it. We are having external scrutiny to it. And it is not just numbers, it is money backing it, which means we are also very clear. And we love the purpose of TPG Rise, saying that there is money to be made in climate change. And therefore, there's as much a social issue as much as there is a capital opportunity out here. And therefore, we want to create sustainable models so that returns are there in this space. And that is how we see this coming together. We are a business, and therefore we would want to do the right thing and for the environment as well as the shareholders. So the purpose fitted in very well, which is the reason we could close this deal so fast.
Yeah, that's a great point. The ESG point, something which we tend to ignore, but that I think is the purpose behind the deal. Ankur, apart from committing capital, what else would this investment bring on table from TPG side? Eventually, what kind of partnership would you enter into? I'm asking you to talk about the exit on the day the deal has been announced, but what is the long-term plan in this partnership apart from bringing capital?
Sure, Nikunj, that's a great question. So look, as Balaji said, this is a long-term investment that we've made, right? For us at TPG Rise Climate, we really want to be a partner of choice for groups and companies like Tata Motors who are pivoting in this direction and are seeking to get market leadership. And we really want to be a force multiplier there. So it's, as Balaji said, it's not just about the capital, but it's about what we can bring to the table, be a good partner, and actually help Tata Motors achieve its ambition and vision in this space. On your question on exit, I think it's too soon, Nikunj, because it'll be very, very, very premature for us to think about when and how. I think at the right time, the board will take its decision. But suffices to say that, both for the Tata Motors team and for us, it's a very large ambition to really win the EV space in this country.
Shailesh, while I was making this point yesterday morning when we were discussing Tata Motors stock, that when you see a EV vehicle on the road, 5 out of 10 times it's a Tata vehicle. So the acceptance for the Tata EV models is there. But Shailesh, EV is an habit, and this habit may take years to transform. And we also know, Shailesh, there are a lot of supply chain issues which the EV the EV vehicles could face. Sometimes it's semiconductors, sometimes availability of battery. In that light, how will things move forward for the EV business?
Yeah, Nikunj, so, just one correction, that instead of 5 out of 10, 7 out of 10 are Tata cars, EV cars that you see on the road. And you rightly said that it is seeing a great acceptance because it has hit the sweet spot of the Indian market needs, as compared to some of the other vehicles which have been basically designed specifically for the markets where they emanate from. And the cars that we have made so far are hitting the sweet spot of what the Indian consumers needed. And that's the reason, why we are seeing the success. You're also right when you say that there's an inertia, in the customers to accept a new technology. And therefore, this is where when we even before launching the Nexon EV, which was the first personal segment car, we started, 6 months back to create awareness, in terms of, overcoming the myths and mental barriers that the customers had. And that's why we did a Leh to Manali kind of a drive to break the myths. We, even at the time of the launch, we went for experience drives, to make people feel comfortable with it. We work very closely with the customers. We connect with the social forums so that we are able to make them feel comfortable, overcome their problems that we are facing. In the process also, we learn the 5 million miles, which we have covered so far out of the 10,000 EVs that we have sold, has given us tremendous learnings. So it's going to be an ongoing journey of continuing to create awareness as we keep on opening micro markets and cities in the country. Right now, we are restricted to only 60, 70. We'll keep on expanding and we'll keep focusing on awareness creation so that we are able to overcome this inertia. We are able to overcome the myths and mental barriers that exist today. As far as semiconductors is concerned, see, it's not only specific to EVs. It is also percolating down to all the categories of the four-wheelers that we talk about. And we are taking different steps, and the similar kind of steps we are taking on the EV side also, which includes, working very closely with the tier 2 manufacturers, semiconductor manufacturers, buying, going for more standard chips, buying from the stockist, and doing certain design innovation, which brings down the use of chips in our vehicles and the electronic components. So all these efforts will be ongoing as far as the EV space is also concerned.
Balaji, to understand the structuring of the EV business of the Tata Group, will it be an asset-light subsidiary? Have you got enough equity funding now after the TPG deal that you don't need to raise capital, or this entity will also get its entire proportion of debt as per, as the development process moves?
Firstly, this is a brand new company that's being incorporated. It's not yet been incorporated. So Tata Motors will first incorporate this with a capital infusion of a paid-up capital of about 700 crores. And that will happen in this quarter. Once that is done, we have to complete all the CPs which we have aligned with TPG Rise. And once that is done, the first tranche of 3,750 crores on the closure of the deal, that will come through we are expecting by end of March, that should be there. And thereafter, we need to go live on this business in terms of ensuring revenue is getting booked, which will be a series of IT system changes that we have to put in place. And once that is done, we're expecting some buyer in Q3 of the next financial year. Towards the end of the year, we should be able to get the next tranche of 3,750 crores. With this 7,500 crores, we are pretty much comfortable for the next 2-3 years in terms of the investment that we need to do. So that gives us enough degrees of freedom to actually operate whatever way we want to. As far as fresh capital raise, etc. is concerned, that we will decide at an appropriate time. The board of the EV company will decide at that point in time. But currently, our job is to ensure that we go live and get the first 2 tranches in.
Shailesh, what are the chances that the EV business may actually start cannibalizing your existing ICE business? Because on that front also, Shailesh, the update from Tata Motors has been reasonably good. Your market share is almost at double digit now, and it's come back to double digit after a gap. What are the chances that there could be a cannibalization within brands?
You're right, and this risk, had been always in our mind. But frankly, we have seen just the contrary of that. It has expanded the ICE sales. I'm just giving you an example of Nexon. Nexon used to sell, 1.5 years back at the time of launch of Nexon, about 3,500, 4,000 a month. Today, the ICE sells around 9,000 to 10,000 a month. With additional 1,000 that we are selling as Nexon EV. So it has a positive rub-off. Actually, it enhances the technology image of the ICE cars also, with a rub-off of EV, which is seen as a new technology or a new generation product. Going forward, as one will see the transition, and more acceptance of EVs. As we have seen the switching of choice between petrol, diesel, electric, for us, it does not matter. Till, we are selling our product, if customers want to buy EV, until we are securing the volumes and rightful volumes for individual product, it should not matter to us. As of now, we have not seen cannibalization, because if there is an EV buyer, he's only looking for EVs, not for ICE. And that's why that is the customers whom we are tapping. Going forward, we'll have to see how the overall trend changes.
I think in markets, when they're evolving, we should be ready to accept the disruption, because we don't disrupt our own market, somebody else will come and disrupt. Therefore, from that perspective, we are absolutely fine. If EV is coming in and cannibalizing PV, that's perfectly fine. There's no problem at all. That's the reason we would rather expand the market overall, because don't forget that for us as Tata Motors, we are 100% owners of the PV business. We are still 85 to 89% owners of the ICE, of the EV business as well. So we are very, very happy if together both of them grow.
Shailesh, I'm coming right back to you, but Ankur, this question is coming your way. Ankur, I'm aware of how TPG has done global deals where they not only bring capital, they also bring knowledge and partnerships. What will TPG bring in terms of knowledge to this deal? Do you have global investments in battery companies, supply chain companies, which you would be able to bring on table? Do you have global investments in the EV space already, which would benefit this your relationship with Tata Motors now?
Absolutely, Nikunj, I think you've hit the nail on the head. Look, for us, this is much more than capital, right? We are very active investors in the EV space, but more broader, the clean energy space globally. Whether you're talking about battery supply chains, you're talking about EV OEMs, you're talking about charging infrastructures, we've made some very significant investments across the world. And our hope and our ambition is that along with the Tata Motors team, we'll actually be able to be ahead of the curve and bring these global pattern recognitions, bring this global knowledge to actually help the team to succeed in the Indian market.
Balaji, if I look at the passenger car margins, they tend to be very volatile, high dependence on raw material, high dependence on where the competition is moving. How do you see the long-term trends in the EV space evolving? Right now, it's an investment space, it's a nascent space. But let's say 2 years from now, 3 years now, when things will settle, will this be a high margin, high profit business for Tata Motors, or the general margins would be in and around a passenger car business?
Currently, I think, Nikunj, what are the movers in this? First is battery prices, the way they're coming off. That needs to be factored in our thinking. Second is scale. Third is as you start localizing this manufacturing more and more as part of the phased manufacturing plan, then you start saving on the customs duty as well, for which you require scale again. So this is actually a bit of a chicken and egg problem that you're trying to solve. So you have to break through with it in terms of putting investments in and putting products in, which is what this deal actually secures. Going forward, we will definitely be an EBITDA positive business from next year onwards. And therefore, thereafter, this business will first have to hit the roadmap of falling in line with the PV margins. And then, of course, we do expect this to move from there onwards to even better than PV margins, simply because scale will start kicking in into it at the time. And as battery prices come off, you should be able to manage that piece as well. So, and don't forget, there is the power of pricing on this, which so far we have not really thought through because we are not driving penetrations hard. EV is always aspirational compared to the traditional ICE. And therefore, there is a brand imagery and there is a power of pricing. So far, we would not want to deploy that. Let's first get adoption going, penetration going. That option is always available to us. Then there's possibility of exports, because the beauty of EV is that the ability to get it homologated in different parts of the country world is much easier compared to ICE. So therefore, there's also a whole margin. And there's a simple data point here. If you just go draw plus minus 35 degrees latitude on the world map, you will not find a single EV player who's there, barring Tata Motors. And that's where bulk of the population lives. And that's where bulk of the affordable EVs will have to be sold. So therefore, we believe this, if you win in India, the ability to actually take this and make this a replicable journey to the rest of the world is also high. All these are there. Then comes carbon credit. So I think we have enough and more degrees of freedom and drive levers available for us to drive up the margins of this business. But we will deploy it as time comes by. First is to build scale.
Shailesh, I'm trying to understand both in terms of distribution and in terms of new showrooms which you will have to roll out. EV is still an urban phenomenon. I mean, it will take time before EV penetrates to smaller cities, before EV charging stations would be available in smaller cities. So how will things now evolve on the distribution supply chain front? Will it be the same showrooms? Will it be different showrooms? Because every company in a sense has followed a different mantra.
Yeah, absolutely. This is a very relevant question, Nikunj. One is that, right now the volumes, as, we mentioned, it's around 1,000 a month, right? We have also gone in a very phased manner, kind of an approach as far as micro market opening is concerned, because it is important that we don't spread our efforts thin in terms of synchronizing the efforts with Tata Power kind of a company. To expand the charging infrastructure, it is important that we go phase-wise, keep saturating the charging network in the limited cities first where we open, where there is higher propensity of buyers for EVs, and then keep on expanding to different parts of, tier 2, tier 3 towns, at the same time ensuring that there is a synchronized action on the charging infra. This is the approach that we are going with. And as far as sales is concerned, we will have to utilize the current network because the throughput of the EVs will be low, will not give a viable case for EVs, through individual outlets, and therefore, for quite some time, also given that the same architectures are being used for electrification, what we are already doing, and the same brands are being used, it makes sense that we utilize the current 2,500 outlets, which is basically going to unleash the potential of EVs also for a long duration of time. But as we start seeing higher throughputs where we want, and we have sufficient, range of electric cars, we start focusing on, specific outlets to give a more immersive experience about the technology. And this is something which we are planning for in phases.
Balaji, just to wrap it up with two more follow-up questions, and the obvious question is that when do you think things will settle down on the supply front for Tata Motors? The last formal communication was that the crunch is still there, but has the crunch directionally improved? Are you getting some visibility, assurance that this is the deadline beyond which things will start normalizing? Because it's a scenario where demand is there, but unfortunately supply is not there.
From a JLR perspective, we expect things to gradually improve from here on. And as far as TML is concerned, we've had a tough September month. But I think, as Shailesh explained earlier, a lot of work has gone to find ways to de-risk it. We are not out of the woods as yet when it comes to the supply chain situation at this point in time. We're not out of the woods. It is gradually improving. It could have been faster, but at least it's improving. That's the way we'll see it.
There was a time, Balaji, when, and I'm again asking something purely for your shareholders, JLR was very highly dependent on China. Given that how China is slowing down, is that a concern, or your dependence or over-dependence of JLR on China is reducing now?
See, what has happened in the last few years, Nikunj, is that JLR has diversified well between China, US, UK, and Europe as well. And that is ensuring that the profit pools are now well diversified across these markets. Having said that, China is still an important part of JLR. And we believe this market, from a premium OEM perspective, the potential still is pretty strong. And we have a range of products coming up, particularly the Range Rover Sport launches coming in the future. We believe we are well equipped in order to continue to drive growth in China.
Well, Balaji, Shailesh, Ankur, gentlemen, all three of you, congratulations on the deal. The stock, like I said, is doing cartwheels. It's a deal which markets and shareholders, I'm sure, are rejoicing. So really appreciate your time.
And that definitely is a deal, like Nikunj said, that the shareholders are definitely enjoying. Tata Motors stock surging in trade today. Tata Motors spoke to ET Now, saying that that EV business will not waste a single minute in trying something that's already been tried by others. The opportunity for EVs opens up multifold with this deal. They're also saying that the external investor will help in proper scrutiny for the sustainable model. Also, the EV cars that were made so far by Tata Motors has hit a sweet spot with the customers. So that's the word coming in from Tata Motors, as well as we had the management from TPG Rise as well speak to ET Now. Tata Motors, as you can see on your screen, up over 18% currently in trade. And not only Tata Motors that is rejoicing in trade, the entire market is actually up in a beat. Nifty currently, if you can see, trading above that 18,150 mark. Sensex comfortably above the 60,500 mark, trading at around 60,700 odd levels. Apart from Tata Motors today, you also have Titan that is surging in today's trading session. You have Mahindra as well that is upbeat. All eyes on Infosys, Wipro. They will be reporting their earnings most likely post-market hours. So you have to watch out for Infosys as well as Wipro. So that is how the market setup is looking like. Tata Motors up and away, up 18% in trade. But at this point in time, we're completely out of time on this edition of Markets at Noon. From Pankaj, myself, and the team that put the show together, thank you for watching. But stay tuned. The newsroom is coming up next.